Hello, everyone. Welcome. Good morning, good afternoon, good evening. Very happy to be here again with you. Today's our last live session. We still have one asynchronous. And finally, I'll give the stage to you guys for you to present to each other what you've done. And I would just have some considerations before. I will randomly pick the team to present, and basically we'll have 8 minutes for you guys to present, and then 4 minutes with questions for interaction. The questions can come from us in the panel or from other students. Okay, just reminding, it's if you can make constructive questions is better. So questions that open up for a nice answer that can make us all to understand the project. The projects not necessarily have to be search fund only, but it has to be entrepreneurial acquisition. So I've talked to some teams this week, and I know some teams are having different approaches. So I'm curious to see. And what else? Let me see. Well, I will have a chronometer here in my phone, and then I will share with you in the chat the time that is pending. Usually I'll try to do like, okay, out of the 8 minutes, you have 4 minutes left. I'll put in the chat. So whoever is presenting, you can, just keep the chat open just to check that. And the same with the question, the moment for questions. And having said that, what else? Oh yes, I will randomly pick the teams, and I would use this app here. I don't know if you can see. Wait, let me take the blur out. Yeah, this app is it's dice, and we can just do this. For example, look, team 1 is Alaukika's group, team 2 is Oana's group, team C is Fadi's group, team D is Fahed's group. So so team 4 is the first. So Fahed's team is number 1, and then Fadi's team, as you can see here, is team number 2. And then later we randomly pick the other 2 teams. Is that all right? Any question before, any comment before we start? So we have guests. I invited a couple of guests to be with us today. I see one is here, Gabriel is here. And I invited Ibrahim as well. I don't know if he's around, not yet. I'll call him to see if he is having problem in entering. But anyway, I don't know if Gabriel, you can introduce yourself in briefly in a minute or 2.
Sure. Hi everyone. Very nice to be here. So I'm Gabriel. I'm from Brazil as well. I've done a search fund called Arco Capital after pursuing my MBA in Cambridge Judge in the UK when I graduated in 2019. My background is mostly on operations management, project management. Then after the MBA, I spent almost a year working in a small PE fund in London. Then came back to Brazil 2020 with the project of Arco Capital. We spent 20 months searching for a company to buy, and in November last year, so basically
traditional search fund, right?
Yeah, traditional search fund. We acquired a SaaS business for insurance brokers, and it's been 1 year operating the company so far. Lots of challenges, very exciting, and very nice to be here and happy to help you guys and take a look at your projects.
Thank you. Thank you very much for being here, Gabriel. I know you're a very big fan of entrepreneurial acquisition, and so I'm very happy that you made to be with us in a Saturday. Thank you.
Sure, no problem.
Okay, so let's start with team four: Fahed, Mohammed, Nasser, and Young Guan. And then when you feel ready, you just, I don't know if I have to make you cohorts or you already have the power to share your screen. Yeah, you do.
Do you see my screen?
Yes, we do. Let me just turn on the chronometer here when you say that you're ready.
We are ready.
Okay, let's start. Thank you.
Hello, everyone. We are a NYMF Search Fund investor and partner. And here's our agenda for today. We'll go through an introduction, team meeting, and market outlook, search fund, return of investment, and then the financials, and our value creation strategy. So here is our search philosophy. Taken from the Greek mythology, our name and search focus on targeting and looking for companies that can grow and will have ESG at its core operation. Here is our team. We have two co-searchers, Young Guan Kim and Fahad Al Fardan. We are from diverse background, industries ranging from high-tech manufacturing, oil and gas, military industries, and management consulting. And our personalities hopefully complement each other's in our journey. Next to
Thank
you,
you, Mohammed.
Nasser.
So, yeah, thank you, Mohammed. So the economic impact of the, and this is where are we looking and where do we want to focus? According to the World Bank, the economic impact of major natural disasters can reach to 7 to 17% of the GDP of some of the European countries. Having said that, we're saying investing in disaster prevention in general makes a total economic sense. In fact, we found that the measures that might be taken to prevent losses might reach to 2 to 10 times benefits against the cost. And we're at a stage in the world where the world is recovering from the pandemic, and there is an opportunity to take more resilient aspects and to introduce more resilient solutions. If we can move to the next slide, we will see how our thinking process went from the prevention and loss prevention and trying to find a target which will result in achieving certain criteria, like finding a fragmented industry growing as well and sizable in a relatively early stages with high number of companies and a good readiness of the ecosystem, and as well having a healthy profit margin. This being taken in consideration, we're targeting a certain industry, which is manufacturing low-risk composites and plastic. If we can move to the next slide, we will see what we're talking about here, to be specific, is the fiber reinforced plastic. And when we look at this with the typical replacement of the what we can call the fiber reinforced plastic, which is steel, we'll see the growth rates across years with also the estimations of this growth. So we will see that today the fiber reinforced plastic is compared to the steel 70% at the moment, 17% at the moment, but we're at early stages. However, it's gaining competitiveness against steel over time, and the expectation is by 2030 it would reach to 23%. We can move to the next slide. We will see also that the reinforced fiber plastic, or the fiber reinforced plastic, has so many applications. At the moment, it's mainly focused on defense. Also, it has so many approaches to be composed, whether using glass, carbon, or any some of other materials. Just not to take so much time from the 8 minutes, I'll give it to Young to talk more about the target company.
Yeah, actually, yeah. Hi, my name is Youngwan. So I'm the researcher. Yeah, I'm gonna introduce the target company. The company name is Hyojin Engineering in Korea. So we focused on finding the low-risk PVC FRP solution provider of this company. And then specifically the difference is actually they had the FM approved 4922 Doctrine 4910. So this is really kind of at this moment the industry standard for semiconductor business, and they're trying to expansion to the other industry and market. Next slide. So yeah, this is the overview of the financial statement. It is official information, and then we actually calculated the value about by multiple by the 5 from the EBITDA. So the value is like $22 million US. That is what I had. And actually the company is I personally know because of my work, and then the owner has the motivation because he got a cancer 5 years ago, and he right now has some problem to how to give the company to his son, or but the problem is his son is not very capable, so that's why it is kind of very good opportunity to us, even though they have very good growth momentum, but they just also have some motivation to sell this company. And next. Yeah.
Okay. So for our value creation strategy, we'll steer operations to increase the size and growth rate of the target company. We'll focus on 4 different areas. The first being marketing to revamp the company's online presence. Second, the sales improvement by extending products and services to other industries. The company currently operates in the semiconductor business, so we'll seek to enter into industries such as military sector, defense, and oil and gas. We're also looking to management restructuring to optimize the workforce, and finally expand through partnerships and contracts geographically. On finance, we'll try to decrease the financial leverage, increase the return on assets, and improve capex efficiency. Red flag is the cost of goods sold and the general expenses. So we will try to focus on capital allocation in order to reduce these areas. Moving on to the next slide. So for our buyout model, our transaction assumptions involve the company is making $31 million in sales and $4.4 million in EBITDA. We'll use a 5 times purchase multiple, placing us at $22 million for the acquisition. We'll also be using 50% debt, for which senior debt will be at 1 times EBITDA multiple, while seller debt will be at 1.5 times. On the annual capitalization, you can see the exact numbers. We've made 3 different scenarios: optimistic, base, and pessimistic for the operations. 15% revenue growth for base, and optimistic is 25%, while no change in the pessimistic case. Going on with the numbers, so for the capital structure, for the investor, we'll be using a 50-50 split, of which is half 16% redeemable preferred stock, while a 0% coupon on non-redeemable participating preferred stock. Manager equity, 10% at acquisition, 10% over 5 years, and then 10% will be at 37% IRR. This is straight line at the as shown below. We have the investor returns after we've done some analysis based on the 3 scenarios, and we can conclude that for the optimistic scenario, we'll be making 6.8 times. Base case is 4.1, pessimistic is 2.1, along with the manager payout on the next table. Moving on to the last slide.
Yeah, you have to finish.
Sorry. So the liquid time horizon is 4 to 6 years. We'll be focusing on making a sale, and in case there is any maybe there's an inappropriate timing to exit the market, we will look at recapitalization. Thank you very much, and feel free to ask any questions.
Okay, thank you. Please keep the presentation on screen, and we have now 3 minutes for questions. Okay, so I don't know if you want to start, Gabriel, or I can start.
Yeah, I'll start here, Newton. Thank you.
Okay.
Congratulations, guys. A very nice presentation. Interesting. The disaster prevention investment thesis seems to be a very interesting one. I've seen several companies with business models in very niche markets where you were able to achieve very high margins. I'm not so sure about this company. How do they, if the business models is actually so resilient in terms of recurring revenues, or the cost of goods sold seems to be a little bit commodity dependent. So have you looked at that? I mean, have you seen something related to that? I think this would be my main question. Another comment is that this kind of companies usually demand some capex to grow. I'm not sure if you have modeled it because it depends on some machinery. But I mean, you made a great job. The buyout model is very well done, seems to be, and congratulations overall.
Cool, thank you. 2 questions.
Yeah,
you guys have 2 minutes and 20 seconds to answer.
Yeah, may I answer? Yeah, actually, the company is, I was their auditor. Actually, the FM approved the loss prevention model, but I was the auditor, so I am kind of the insider, so I know their information. This market is very niche. Actually, the kind of the highly protected market is kind of niche market. So the margin is like much higher than, so typically the material price is like, the retail price is kind of double or sometimes triple. So that's why still their profitability is very strong. And then the semiconductor, for the point of view, the money is still kind of very small piece of money. So usually those high-tech industry just want to invest, more for their loss prevention because their opportunity cost is much higher than the price. So kind of in a coexistence model. And then, the second one is, the capex is also, projected there. So usually, their capex is at this moment, they're very fine because they already invested a lot for their current facility, the investment there. So yeah, I think just only for some expansion, some needed, but the chemical point of view, actually, yeah, they don't need to have a lot of, those kind of heavy investment, but still they have the other model with them right now trying to have hire some local partner for making some, goods on their, side. So previously they only have their location in Korea, but recently they also try to expand their business to Taylor, Texas, because Samsung invested about $60 billion on there, and then they just hired the expansion. I think that there's no problem with they're using the partnership model. Yeah.
Oh, you still have 20 seconds. So quickly, do any one of you understand well about the company industry, or you will have to learn?
No, I know very well about the whole industry, and actually the problem is I have just so many, kind of confidential information as an insider. So that's something maybe legal review I need to have actually,
Yeah,
even I know the whole component, the kind of the chemical formulation again, already, actually, even their competitors.
Actually, we have Fahad also worked on semiconductors and oil and gas, and also one of the main applications of the reinforced polymer is in defense, and we have Mohammed Al-Dosri who work in the military industry as well.
Okay, thank you. We have to finish. Thank you very much. Congratulations. It was an interesting presentation. Let me find the icon for clapping here. Found. So good job. Okay, next team is Fadi, Frank, Lucia, Tao, Bao, and Yan. Tell me when you're ready, and I will let you know the next team. 4, 6, no.
All right.
One.
Tossing
the next team
on here.
Okay, next
team. Can you guys see my screen?
Can you hear me?
Yes. Can you hear me?
Okay, next team is team 1. Okay, after you guys is Alaukika, Gabriela, Jessica, Linda, and Raquel. And then team 2 after them. Tell me when you're ready, and we start the time.
Sorry, give me 1 second. I'm having a little bit of a technical issue here. There we go. Okay, I think we're ready to roll. So welcome everyone. We are the Mercury Fund. fund focused on finding opportunities in the tech space. Now, to be fully transparent and upfront, based on the industry that we have selected and the company that we have identified to acquire, Mercury Fund probably is not considered a search fund, but more or less an early investment opportunity, something along the lines of a like a seed round. The company Remote Sum is the company that we're looking to buy. It doesn't necessarily meet the monetary criteria. Nonetheless, we are very much interested in, inspired by the search fund methodology, and are implementing it in our search. So a little bit about us. My name is Val.
Do you want to put in full screen?
Let me try. Let me try, because my computer will freeze up. Let me give it a shot.
Okay. I'm sorry.
Can you guys see? Is it okay?
Yes. Yes.
Okay, sweet. So a little bit about us. My name is Val. I'm an FP&A manager at Nike, focused on the Latin American region. Obviously a candidate at IE Business School. I have my undergrad in finance at Portland State University. This is also where I live, in Portland, Oregon. And my partner is Tal, and I'll let him speak a little bit about his experience and take it over the presentation.
So hey everybody, I'm Tal. My background is in tech. I have undergraduate in computer science, and today I'm a student at IE. And my experience is in tech, specifically in machine learning, AI, and cybersecurity. So the market that we were focused on during our search is the global recruitment software market. So we see that there is a trend in the market today that more and more companies do use it. They more and more use software for recruitment. So they not only manage their candidates pipe over a software, but also attract new candidates and get the demand from it. Okay, so it's a huge market as we see it, and we saw that there's also another trend in small businesses where they don't necessarily have enough resources to maintain the entire pipe and the entire process of interviewing and the technical exams and all that long process that takes place in for software developers hiring. Next slide, please. So we decided to, in the short term, to focus on the small businesses and also small startups, early stage companies. And we saw that 39 of those companies do not use a recruitment software. And most of them also said that they find the recruiter approach as effective, but also as they found 48% of them were found the online software is effective. Okay, so that's the opportunity that we identified here to come with a different solution that what exists today in the market. Next slide. And in the long term, we also think that also large enterprises is a good opportunity, because not only pure tech companies use hire software developers. Nowadays, every company has data, and they, as part of their omni-channel strategy, they also have website and mobile app and stuff like that. So they hire their own developers. They need data warehouses, so they need data experts, and they need the machine learning. So those technologies become more and more common and commodity, and every company, also large companies and traditional companies, hire software developers. So let's talk a bit about a company that we found. So its name is Remote Sum, and it's basically a marketplace where you can assign as a candidate, or either as a candidate or as a company, and then you can find a company to be worked at or hire candidates, right? Software developers. So it's a marketplace, and what it makes different is a vetting process. They develop their own vetting process to find, to make sure that the candidates are prepared and ready and have the skill set for the job. The company is already profitable, and Val will dive into the numbers in a few slides. And they did not employ any marketing up to date. So we see here another possibility to expand. So our value proposition and the main reason for buying this company is that we think that we can develop code analysis of candidates' open source projects for the vetting process and to enrich the process and the company with more characteristics about the candidate by utilizing code analysis techniques. Okay, so I'm familiar with those techniques from a different aspect of cybersecurity aspects and finding malicious actors, but the same techniques can be utilized for that market where nobody, at least from our research, does that today. Next slide. So just to understand the phenomena of open source. So today, like almost every software developer out there uses or develops open source. So you can see like contributions, many contributions that software developers do as part of their job that are being paid for, or as a hobby or just as a side project. So it's a very common to see in the resume of a candidate. It's open source, their open source projects. And I'll hand it over to Val again. Thank you.
Nice. To really quickly run through the numbers, to get after this opportunity, we're seeking to raise about 500K to acquire RemoteSum and also to implement the changes that Tal just mentioned. To be more specific, we're seeking to raise 200K for in exchange of 40% from the investor side. And the remainder of the funding will come from ourselves and friends and family, as well as an SBA loan. Jumping into our growth projections. So year 1 and 2, we really want to get after implementing the EOS methodology into the company to really optimize the operating model, as well as invest heavily into R&D, which really means working with the right developers to really fine tune the platform. Now, given our experience and the fact that Tal has a lot of connection in the industry, this is where we can use cost arbitrage by hiring developers that are outside of the US, but deliver the same quality of work. In years 2, we're going to get aggressively after our marketing. This is where we would partner with a marketing firm and also develop our different marketing channels. Years 3, we would really focus on increasing revenue by increasing our markup fees on the deals. Currently, they're at 15%, and that's lower than industry average at 20% or 25%. In years 4 and 5, we would get after partnering with larger companies. So moving away kind of from the small businesses to larger companies that are Fortune 500, and also looking to expand our revenue by doing contract offerings, facilitating contracts with software developers through our platform. So with our projections, we believe that the investment could be recouped for investors by year 4. The projected IRR is going to be at about 28%, and our CAGR is at 26%. And this is our team that is here to support us.
Thank you. Thank you. You guys have now 4 minutes for question. And my first question is, I don't know if you talked about that, but it's a number of employees and revenues of the current company.
Yeah, I had to gloss over a few things just because of the time. There are 2 employees in the company, and they have part-time support as well. And in terms of revenues, the current revenue of the company is about 265K. This is the like year 0. Their profits are about 55K and a margin of 21%.
Okay, thank you.
Yeah, so definitely on the smaller side in terms of like the profitability, but we see it as a significant opportunity to scale quickly, given the technical background of Tal and what we can do to implement some of these changes. Okay, thank you. Gabriel?
Yeah, hey guys, congratulations. I mean, it was a very nice presentation. The niche and the company that you've selected is very interesting for entrepreneurial acquisition as well as any tech company, especially if being focused on SMEs, which means that you have probably a very fragmented customer base, and it gives more robustness and resilience to the business model. On the other side, my question would be, I mean, this is, as you said in the beginning, this is more like a seed investment. Also, and we can also see that by means of the valuation that you're projecting in mentoring the company. So how do you protect yourself from the downside? Or I don't know if you ever came to think about this, but what kind of investors are are you thinking about partnering with you? Because traditional search fund investments tend to be a little bit more conservative, and whenever you enter in a company with a higher valuation, you also have a high risk of not delivering the results that you want. Yeah. Anyways, so how would you go about your investors on that one?
Okay, I can take it, Val.
Yeah, go ahead, Tom.
So yeah, we think that given the valuation and the numbers here, since it's not a large check, like it's only 400K, we can get funded by angel investors, okay, that specializes in deep tech.
Yeah, it makes sense. Yeah.
What are the roles of the current employees in the future of the company? Are they staying or leaving? It wasn't clear for me.
There's a full-time developer, and I believe it's like an operating manager. So the idea is for them to stay, but I think even if they transitioned, the team that we have, we could fill in those gaps. I think what we're really after is the existing kind of business as is, and it would be kind of evolved significantly with like Tal and his team.
So what are you actually buying? Just for me to understand. The technology, the clients, the two guys, what are you actually acquiring?
It's more of the existing like vetting process that they have set up, and the idea is to kind of evolve and grow it more. Yeah.
So it's the process.
Needless to say, they already developed the marketplace, right? So they have operations going on with candidates and companies, and they have revenue. So we also buy the operation, even though it's so early, but still there is something to start and build it up from. And the actual marketplace and the initial development is already in place.
Yeah, one point that it's interesting also is if you two guys enter the company, how would the company pay you? I mean, by the size of the company, they would probably go from a profit to a loss just by adding your salaries to the payroll. So do you intend just to invest and be outside, just kind of advising or some kind of board of director or something like this?
So part of the actual startup capital would be to use to hire additional help and to outsource it. And as we get more revenues, as the company scales, we would actually bring people in-house.
Okay, guys, time's up.
Thank you.
Thank you very much. Round of applause here. Thank you. Let's go for the next team, which is Alokika, Gabriela, Jessica, Linda, and Raquel. Tell me when you're ready. I'll put the 8 minutes.
Can you all see my screen?
Yes.
Can you see it now?
I saw your hand. I don't know if you want to talk.
Can you see it now? Now that I have it on full screen? Excellent. All right. Alu, the floor is yours.
Right. Awesome.
Okay,
so
let's do it.
Good afternoon, Newton. It's so good to see you again after a while. Thank you for taking the time to meet with us. Your class inspired us to pursue the search fund space. So now we're here, FAM Capital, representing an all-female crew, and we're excited to commence this journey with Newton Capital.
You just got an extra point for that.
Starting with the search team, our team is a global, and so we're all coming from all over the world with an MBA from IE University, a global university that connects us all. We're all 2023 graduates. I'm originally from India and have been living in the United States for over a dozen years, so I have market knowledge of both geographies with connections in the investment industry and in the States through my background in marketing with various investing products, including private equity. And I'm driven by curiosity, and I'm a lifelong learner. Rochelle, do you want to introduce yourself?
Yes, thank you. So my professional experience is mostly in banks, finance, but also agricultural industry. I've been educated in finance, working in several countries. And my background is also on commodity finance as well, so was focused on financial markets. And I'm from France. On the next slide, on the next slide, we can see that we have met in the IE Business School, both Alou and I. And from this friendship, we have a common background and also complementarity that can help in the search funds, which are as well indeed from the MBA, but also from the background we have. Maybe Alou, you want to say something on your side?
Yeah, no. Yeah, sure. No, just I am a marketing and finance expert, and Rochelle has entrepreneurship experience. So she has experience in scaling up business model. So she's our agricultural business expert as well. Moving on to the support team. Linda, do you want to take it over?
Yes, thank you. So real quickly, the support team includes Gabriela, Jessica, and myself, and we'll be responsible for feeding the pipeline with the companies that meet the search fund's investment criteria and performing preliminary due diligence. So that's it for our searchers and supporting team. We're gonna continue on our search country. So real quickly on the US economy, as of 2021, as you can see here on the screen, the US carry about 24% of the global economy with a nominal GDP of 23 million and about 69K GDP per capita. Though inflation is its highest in 40 years, the Federal Reserve is using contractionary monetary policies such as increasing interest rates to decrease the inflation. In terms of SMEs, there are about 8 million SMEs in the US, where people 55 plus age make up 21% of the US population and own about 51% of SMEs. And finally, the US dollar index has ranged between 90 and 110 over the last several years, indicating that the dollar has gradually gained a strength versus the other currencies, despite the current economic downturn that the country is enduring. So in terms of the search criteria, I'm gonna kick it to Jess.
Sure. So we are industry agnostic, but we are favoring industries for which we have prior experience that fit our desired criteria, including the agriculture industry. Our key desirable company traits consider positioning ourselves for the greatest likelihood of long-term success. We are searching for a growing company with EBITDA margins above 15% and a history of positive cash flow generation. Our strategic approach to finding these companies will involve leveraging our support team, our networks, and our grit. Next, Linda. So for deal sourcing, the source of deals will come from 4 main avenues, the primary of which is the broader network of our searchers, including the search team and the investors. This will best enable introductions to take place between prospective companies and the search fund, which should facilitate meaningful discussions. The other sources used will be brokers, the online options, such as search platforms and trade shows. Thanks.
Now, a quick focus on the search fund and the sector where I'm focusing, agriculture industry in the US, which is one of the largest market for SME to search target, and US is the first exporter. Today, we're about 2 million farm in operation in the US, which is declining, but still very high. And it's about 70% on the American workforce as well, which is the biggest actually numbers for the workforce. It's 1.1 trillion market. Quickly on the opportunity, it's increasing demand. All sector from agricultural, from non-food and food are in growth. It's high demand in technology. Technology access is very important, and there is a large offer in this market in the US. Quickly on treats, it's global warming for all non-food and food sector in the agricultural. Shipping is also, as we've seen in COVID crisis, quite important. Customer trade and international relations as well. We can go on the next slide showing the market opportunities. Just a focus on nurseries and greenhouse. So this is the target we're gonna talk about today. It's mostly a SME market, which is perfect for our search fund. It's 42 billion market size in the US. It's about 20,000 nursery operating there. And the annual growth, it's about 2% per year. It's a very fragmented, it's a medium fragmented industry. There is high customer demand coming from sustainability trends. Infrastructure costs are a threat because it's very important, and also the cost for shipping are growing, as well as the global warming. It's a threat and increasing all those costs. We're going to pass also quickly on the fight forces, just to see the threat on the new entrants.
Rochelle, I think we want to make sure we want to be conscious of our time. So we're going to jump into investment opportunity. If Newton Capital would like to see more info, we can share these slides. Alu, do you want to skip to this slide or the following one?
I can present quickly. So the company we have presenting now is Pacifica Nursery, incorporated in 1998. We are targeting this company because in Pacific is the most important region for nurseries. The funding team is retiring, and it's a great opportunity we're going to see after all the numbers and challenges we're going to face.
I'll quickly go over the growth opportunities. We see a lot growth opportunities for customer expansion, because right now it's concentrated to just landscapers. So expanding offerings to real estate and construction products and direct to consumer as well. We can also expand verticals by edible greenhouse farming, digitalizing operations through IoT, AI, and cloud computing, and also focus on sustainability by integrating vertical farming practices for using less water and pesticides. Next up, I'll pass it on to Jessica for DLIC economics.
Sure. So we're currently in the first pass evaluating this target business. The EBITDA margins are in our range, as well as our favorable cash flows. We have a cap structure of 51% debt and 49% equity, assuming senior debt of 22% at 1x EBITDA. And we're open to other companies and industries as well. Next. Hello?
Yes, this is just a base case, an optimistic case and pessimistic case scenarios for the exit strategy. It could be acquired by retailer, nursery, or management acquisition. We want to be acquired by retailers to get the most for our investors with 43.2% IRR. And that's it. Thank you.
Thank you. You now have 3 minutes for answering questions. Congratulations, interesting presentation. Gabriel, do you want to start?
Hey, congratulations. It was very, very interesting. I agree the industry you selected is very strong for search fund. I would ask how, or have you seen who are the customers of these nurseries? I mean, could you expand a little bit on that if you have like one big customer or several different,
right?
And how is the customer behavior as well? I mean, if you're thinking about becoming revenues.
Yeah, so right now, this particular business that we're looking at has established relationships with gardeners and landscapers, and they also sell to other nurseries and retailers as well. So for retailers, they have ready packaged plants, so it's ready to sell directly to consumers, but right now they are not selling directly to consumers. They're wholesaler nursery. So that's why we see growth for expansion to direct to consumers by kind of branding this business and offering differentiation with branding and sustainability offerings. Yeah, so right now it's very fragmented, so we can basically optimize the relationships that they already have and expand it onto other channels and verticals.
If I may add as well, on terms of expansion, we're also thinking about edible plants. This is something they're not doing right now, and this is a very growing market with 2 digits growing in the industry in the US. So it might be interesting and can touch as well the B2C customers.
How much growth have you estimated in your model year over year for this business?
For year over year, on average, it's 10% growth, CAGR.
Okay, yeah, interesting. Yeah, it makes sense. Congratulations.
Thank you.
More questions from students? We still have 45 seconds. No questions? you want to speak something else that you didn't have time to share? The team?
Yeah, we're just looking forward to work with you, Newton.
To what?
We're just looking forward to working with you in the future. We're looking forward to your investment.
I liked your background. So cool. Okay, so thank you so much. It was interesting indeed. Good job. Okay, last team now. It's Joanna, May, Monica, Pablo, and Roman. Tell me when you're ready for the 8 minutes.
Okay, I think I can start us off. So good day to all of our investors from all across the world. Today, we are presenting you with a potential acquisition target that Project Oliver has identified through our search. So first, to start off by introducing ourselves. Project Oliver is co-managed by Pablo and I. Pablo is Spanish. He's an industrial engineer with business strategy and product management background. And he also grew up in a very entrepreneurial family. I myself am Singaporean. I do have European residency status. And I also have a background in accounting and finance. I also minored in business law. My career focused mainly on consulting for international development, and I have also been in a founding team for an agriculture tech consulting firm. So Pablo and I, we met in Spain during our MBA at IE Business School, and we got paired up from the very first team and have really enjoyed working together since then. He's a more extroverted expert relationship builder, and I'm the more geeky behind the scenes strategies. And we chose to work closely on many occasions throughout our time at IE. And our intern team consists of colleagues from the IE MBA as well. We have people from VC, consulting background, sales, as well as people and culture management. So in the next slide, you can see that we're organized into the relationship management, looking at lead gen, investor relation, as well as the due diligence teams focusing on financial, culture, customer, and supplier relationship analysis. And we're focusing on the Spanish market for our acquisition.
Yeah, in macroeconomic terms, Spain is the fourth economy in the European Union and the 14th largest economy in the world, with a GDP growing at a 4% rate year over year. One of the historical issues of Spain as a country is the unemployment rate, which is higher than the average of the European Union. The current inflation rate is the highest in 4 decades, but the last FDI report describes Spain as a good country to invest, especially considering the privileged position of the country in the current green energy boom. It is also important to consider that the vast majority of the enterprises in the country are SMEs, and they are responsible for around 66% of the national employment. In the next slide, we are introducing to you Olivo Real, which is our target company, and we wanted to highlight some key facts. Olivo Real has been around for almost a century and keeps being fully family-owned. The current yearly revenue is around 15 million euros, but the growth rate has been relatively low over the past 5 years. The EBITDA percentage is around 10%, which is not bad, and the location of the company couldn't be any better. Jaén is actually, as you see in the slide, where 25% of the global olive oil production takes place. Now, the family who owns Olivo Real, especially the younger generations, see the business as too much of a sacrifice, and they prefer to sell the company, while the older generations do not want to see the company shutting down. Now, in the next slide, my colleagues will introduce the industry.
Looking at the olive oil industry, we see that at a global level, it was valued at almost $14 billion in 2021, while the European market had one of the biggest shares of almost $7 billion. The reason why we have the biggest market in Europe is due to the highest olive tree cultivation, and additionally, the quality of the olive oil produced mostly in Spain and Italy is one of the best qualities. We can see on the slide some of the competitors, with Agesur leading with 68 million liters of bottled oil in 2019 and having a revenue of more than 520 million euros. On the next slide, we see a steady growing global market that is expected to reach almost $18 billion by 2029. And the reason behind this growth is the awareness on health benefits of olive oil and the growing interest of individuals towards a more natural and raw oils, as these are attributed to be more safer and healthier in comparison to their processed counterparts. So now let's go into the numbers.
Thank you, Monica. So taking a look at the highlights from our buyout model, let's start with the valuation. We believe that the enterprise value at present is around 12 million euros on the basis of a 10% EBITDA margin and of the enterprise value to EBITDA average multiple for the food and beverage industry in Spain. As Pablo has mentioned, the business is 100% family owned, so that gives us a number of considerations when it comes to the acquisition and financing thereof. On one hand, we could buy the whole company, in which case we would also use an industry standard debt to EBITDA multiple of around 4x, which would entail 4 times 1.5 million, so 6 million in debt, and the rest would be equity that we would have to raise from our investors. And the alternative scenario, in which we would leave the company with the current management and family with a 20% stake, which then would entail only having to raise in total having to put up 9.6 million, out of which 3.6 in equity. And this is also the suggestion that we would have to still benefit from the family's positive influence, all the while we would retain all the decision-making power.
Going forward in the ownership phase, we plan to create value from 3 directions: organic growth, M&As, and strategic partnerships with complementary industries. In the organic growth phase, we're thinking to sit down with the owner and look at the margin and rethink pricing strategies, product portfolio, market segments, and geographies in order to expand that margin. We plan to increase the exports and the selling channels, for example, improve the online channels selling. We plan to implement EOS operating software system from day one, as well as other digital transformation tools in order to have better insights on our crops and better analytics. And we plan to analyze the financing opportunities because the EU is giving non-reimbursable funds for agriculture, as well as EBRD non-reimbursable funds for SMEs. In the M&A space, we think to look at complementary industries with companies that produce sauces or vinegar, as well as looking at companies that are on new geographies for the production. For example, Tunisia is the largest organic olive grove producer. And from partnership perspective, we plan to look at healthcare and beauty and skin related industries, because we know the benefits of the olive oil in healthcare as well as beauty, retail related in order to have promotions in the online channels, as well as to consider the biomass production from the agricultural fields into transforming it into energy, as we heard from Pablo, that the FDIs are directed in Spain for green energy. And that's why we put here the waste management companies. And now back to you, Roman.
Thanks, Joanna. So thinking about the exit, our ambition is to turn the company into a leading pan-European olive oil producer. We have an ownership horizon of around 10 years, during which we hope to return our investors with at least 10x the invested capital. We think that there are 3 exit paths, though 2 are much more likely than the last one. First, a sale to a strategic investor, so not a large olive oil producer, but potentially a food conglomerate, which we deem to be the most likely exit. And then the financial investors, such as private equity, would be our next pick, and last but not least, an IPO. And with that, we are opening the floor to questions.
Cool, thank you. You guys have 4 minutes to answer questions from us or from your colleagues. I have a question with regard to the multiple. So is this a multiple that you find in the food industry in Spain?
Yes, it is.
8? Really? Wow. Okay.
It's the last couple of years, multiples have increased a lot. Granted, there might be a little bit of a lag. I think this is Q4 2021.
Okay, I have a hand from Frank.
Yeah, guys, excellent presentation. My question had more to do with just the space you're currently operating. So you have a single product that you're producing with plans to sort of diversify the kind of products and markets you're heading to. Do you see any risks regarding, things like, for example, natural disasters? Or those things that you considered when you were looking at this company in particular that could actually affect the products that you're producing?
That's a very good question, actually, Frank. And we spoke about that in our group. And it happens that the olive trees actually is among the most resilient trees you find. So I think if you research, you will see that historically olive trees, plantations and fields have resisted all kinds of natural disasters. Of course, if there is an earthquake or something like that and the earth literally breaks, then of course we have a problem. But Spain is a very stable country in that regard. So actually, we believe we are going to stay very robust in the production. Yeah.
Thank you.
Okay, now, Gabriel, do you have a question before Raquel?
Yeah, guys, congratulations. Seems interesting business model. I have a question about the industry. How does the olive oil price varies over time? I mean, is this something that has a big ups and downs over the years, or is this something relatively constant? I mean, I'm thinking about on the revenue forecast that you make and how you expect the company to be resilient over time with that.
So over time, we see a growth also in the price of the oil, but it's quite stable actually. So it's not a huge growth of the price, but what's important is the quality of the oil, and this is something that we are looking at also, to have more of a premium line, as well as use the other oil as you've seen in other industries and so on.
And
okay,
just another one real quick. What is the capacity utilization of this company? I don't know if you got into that, but if you have like a farm, you probably have a capacity of producing a certain amount, and you're currently producing a percentage of that. And whenever you hit that, you need to invest in other lands and so on.
Yeah. Yeah, Gabriel, that's also an excellent question. Actually, with the insights we have in this company, which is a real company of people we know, they are operating at around 70% capacity right now. And they are looking at actually, there is a neighbor kind of company that is doing pretty bad, and they have actually a plant for olive oil production. So an acquisition of that particular plant nearby for increasing production in case it is needed would be also in the plans. But still, we have 30% capacity left.
Perfect. Okay, thank you.
Okay, we still have 25 seconds for Raquel and the answer, please.
Yeah, it's Rachel. Just a quick question on the competition. Olive oil is a worldwide industry, and there is many competitors. Spain has still, high labor costs compared to other countries. How do you fight the competition? What is your advantages to fight this competition?
Actually, what we would be targeting a premium quality olive oil, first of all. Second is that, as we mentioned, we want to grow also in other areas, like the waste management, the energy production, what Ioana presented. No, so it's not only that we want to bring to Olivo Real the olive oil production part, but also diversify more in the revenue streams. No, so we believe that could be a differentiator.
Thank you for the great presentation.
Thank you, guys. Congratulations. Sorry, Rachel, for saying your name wrong. Well, congratulations, all of you. I had a lot of fun learning from the projects that you presented. I took a lot of notes here. Ibrahim wrote me saying that he had a problem, but he's happy to watch the recorded video and provide you guys with feedback. And he actually said that if you guys want, he can meet with each one of you as or either individually or as a group. And I have some notes that I took from all the presentations I want to go through, but I don't know if Gabriel first, if you have some final words or notes that it took for all of them or specific groups, or I can start.
Well, I think everyone did pretty well. I think we had a very diverse set of investment theses and teams, which was interesting, coming from plastics to olive oil and tech and so on. So congratulations, you guys. It seems that you have rounded up pretty well the concept of the model, and you even got some very interesting potential imaginary deals. So congratulations.
Yeah, what we try to do here, Gabriel, just for you to understand, we talked a little bit before, but it was actually to, instead of just let's say presenting the PPM or just the the plan on what to perhaps do in the future, we tried to do the whole thing. And so actually try to find a real company to actually assess it and see if it, how it could be done. Most of the companies here came from our own network, so companies of colleagues, friends, former workers, bosses, etc. And so it's we could bring more to reality the exercise. But that's why I also think you guys did a great job. Young one, usually we don't in these exercise. Maybe it was my fault. We don't release the name of the company. So I don't know if you release the actual name of the company, but usually we use name Alpha or Beta or something like that. Okay.
Thank you.
I mean, if you're going to present again this case to other people, just use a fake name.
Yeah, thank you.
Well, some notes that I made was overall, again, you did a very interesting presentation. I think some teams, it took a while for me to figure out what you were talking about. So, for example, in the first team, young one, your first team, it took me a while to realize that it was in South Korea, the company, the search, and so on. And not only that, so my point is, usually I would recommend you to go straight and say, look, this is a company that we looked for and we found in South Korea. It's like one of the first things that you say. And then you introduced about the industry, but I would recommend to talk about, in this case, the South Korean market before. So this is the market, these are the number of deals that we have, the number of SMEs that we have, and so on and so forth. And then you can go into the industry and then into the transaction. I think this is usually more the way we talk about these deals usually. To understand, you talked about the business perhaps before, talking about the country and what was the industry, and then the company. So I think this recommendation team or actually that, so it's easier to follow. Sorry, team Joanna, Monica, and Pablo. Yeah, this was the team 3. Sorry, the third team that presented, which was the team 1, was Alakika, Gabriela, Jessica, Linda, and Rochelle in the US, right? So you girls did exactly that. It was very easy to follow your rationale, So if there was a presentation that stood out, yours did in the way it was conducted. So what else? I think for the Israel team, Gabriel mentioned that, and you guys mentioned that angel investors could be a good option. I agree.
Newton, I think we're losing you a little bit. Am I the only one who's losing him?
No, we are.
Acquisition is not some.
Yeah, you're cutting off, Newton.
Really? Oh, my internet is so. Wait. Are you there? Hello, hello. Hello.
Yes, we have the sound, but not the image.
I'm here.
Yeah,
Maybe you can turn your camera off. Yes.
Yeah, we hear
Okay.
you. Just, yeah.
Okay, I'm sorry. I don't know. My connection is apparently very good. I don't know what happened. Okay, I took my video off. Let's see if it helps until it stabilizes a bit. No, I was saying that search fund is still something not normal, and actually entrepreneurial acquisition is something not so normal and known in entrepreneurship. And when you talk about smaller tickets, below $5 million enterprise value, which is called micro private equity, it's still also, there's not a standard way of doing. And so it's still something that is very much unknown in the venture capital industry, although I think it's going to grow. I've seen some acquisitions of startups going on in different moments, but usually they are very specific. So, in courses like this, I think little by little, we'll also start learning and discussing about how to buy smaller companies than the typical search fund target, which are companies that are usually above $5 million enterprise value. So, of course, in this case, this is a $500,000 company, which is, I would almost classify as nano private equity, which is something that there are some debates in the US about how to do that. We don't have yet a model, but I do think that we can explore, and if you have a good plan, there was no reason why some investors could believe that you guys could acquire this small company and make it grow. But anyway, it's different from search funds in the sense that search fund is more standardized and everybody knows the rules. And so it makes it easier to negotiate the terms. Could you hear?
Yeah, thank you for the feedback, Newton.
Okay. Well, I think we are done. I don't know if, yeah, you guys are pioneers. And I don't know if any other comment from you guys as a feedback to the teams. Okay, so let me see if I can come back. Oh, Rochelle?
Yeah, just have a suggestion of question. Will we receive the presentation of all the teams, or maybe if we can share it, I think it would be interesting to have it.
Okay, yeah, actually one thing that I would like to ask you is you guys to send me the presentation just for me to review, but if you're fine with that, we could share with the whole class each other's presentation. Okay, so as soon as I receive your presentation, you can send me by email, please. I will then share with everyone in the Blackboard. Well, this week then we have our last forum debate, and we'll have our exam. Our exam will be asynchronous, so you guys can take your time to do the exam. It's going to randomly choose the questions about entrepreneur acquisition, search funds, based primarily on the search fund primer document and some of the other documents that we read through the course. And being live here with you now, unfortunately, this course is so short for the last time. All I can say is thank you so much for your engagement so far. It was really refreshing for me. This is the very first time at EtA at IE, and it was you know, for me a kind of I conquered that, in the sense that I've been talking to IE about offering this subject also to the global MBAs for some years, and so I'm so happy that we finally made it, and you guys have exactly or very similar now type of discussions as we have in the full-time MBA regarding this aspect. So thank you so much. I would just propose if we just take a picture of us, and I'll send to you guys in our WhatsApp group, and I'll send you also to you, Gabriel, if you don't mind, just to have a picture of today's session. So please fix your hair. And let's take our picture. Wait, here. 3, 2, 1. Go. And now, just for us to finish, I will send you the picture. Just I'm seeing some comments in the chat. Just some, like I call it checkout. Things that you learned throughout the course. We'll conclude the course this week in the forum, but if you can share just in one sentence or one word what caught your attention throughout our interactions, it would be great. So let me see. Linda, the course was short, but we learned a lot. I personally learned a lot. Cool, thank you. Hello, Kiko, we learned so much. Very interesting class, new subject for Rochelle. Yeah, great. I'm passionate about that. Safe search fund. Thank you. The whole model was new for me. Nasser. Opportunities. Great speaker. Thank you. Love this highly practical class. Learned so much. Still learning. Unexpected career opportunity. Thank you, Roman. Yeah, it's cool, isn't it? And it's amazing. I don't know. It's ever since I came across this concept, it was, I think, like 9 years ago. I've been always like, wow, this is so cool. Even today. And meeting, and thank you so much again, Gabriel. Meeting young people like you, really making it happen, and now you're managing your company. It's like it's really nice to see. Okay, guys, thank you all again. I meet you on Monday morning in the forum, and hopefully in any city around the world. Count on me, please, for anything related to entrepreneurship or something else.
Thank you, Newton.
Thank you. Bye.
Come to Madrid in February.
Thank you.
Obrigado.
De nada.
Bye, Newton. Bye, everyone.
Bye-bye.
Thank you, everyone.
Thank you, Newton.
Bye.
I really enjoyed it.
Newton, I have a question. Maybe I
Sure.
missed that